Good morning. This is live daily market outlook for Tuesday, 7th of May 2013, prepared by Windsor Brokers. Highlight of the day comes from Australia, where the Central Bank of Australia unexpectedly cut the rates by 0.25% to 2.75. A reminder, the expectations were at unchanged at 3%, though the Central Bank decided to reduce the interest rates with the immediate reaction showing the Australian dollar slumping to a 2-month low after the rate cut, while the euro remained capped at the common as the common currency was unable to shake off dovish comments from European Central Bank Chief Mario Draghi seen yesterday. Reminder, the comments from Draghi saying that central bank is ready to act again after the recent easing that brought the interest rates to the lowest levels to support weakening European economy. As said, Aussie dollar lost ground and lost quite strong support in the near-term base at 102.20. Sliding down to 101.75 so far, with the outlook in the near term seen as a negative. Technicals are in the lower levels in the negative area, seeing more pressure on the currency pair. Other pairs are also pressured, as said yesterday's euro. Fresh weakness caused by comments of Mario Draghi the euro maintains a negative tone, as overnight's price action was for now held by an under 131 handle, and more pressure seen towards the downside, though no significant changes is seen in past few weeks, as the single currency as well as a number of other pairs still hold certain ranges, and despite the quite bumpy rides seen in past the last 3 days of the last week, did not seriously move the outlook of for the major pairs, as most of them stay within the range. Dollar is higher this morning with commodities at the back foot and the gold and silver breaking below some important supports, though still we have room towards the downside. More of this we're going to see in our technical part. From today's releases, apart from the already mentioned Australian Central Bank's action when the rates were cut to 2.75 from 3%. Consumer climate from Switzerland, already released, showed worse than expected release. That was today's release was -5 compared to -3 forecast, but still above the fourth quarter of 2012, which was -6, so slight improvement seen, but still in the negative field. Unemployment rate in Switzerland remained unchanged at 3.1, while French data showing industrial production deteriorating further, -0.9% today's release versus 0.7% in February, and -0.2 forecast, while trade balance in France showed some improvement, narrowing the trading gap to 4.7 billion euros compared to 6 billion euros gap in the month of February, and 5.3 billion euros gap forecasted for today. Foreign currency reserves from Switzerland are already released. Unfortunately, we again don't have the update. 438.3 billion Swiss francs was the previous release. Today's one, we're going to have it in a while. Meantime, the factory orders from Germany are due next at 10 o'clock GMT. -0.4% is today's forecast, quite negative compared to the 2.3% increase in the month of February. Economic optimism from United States due at 1400 GMT for May. 47.1 is forecast, and more optimistic compared to the previous release of 46.2, and U.S. consumer credit for March is due at 1900 GMT. Pardon, 16.2 billion US dollars is forecast compared to 18.1 billion in the month of February. And finally, Central Bank of New Zealand Financial Stability Report is due at 21:00 GMT. Meantime, I owe you information. 433.6 billion is are the foreign currency reserves in Switzerland. We are going to enter it now. I do apologize for a small delay. And basically, this is all from today's economic indicators. Not very busy calendar, but still not lacking action, as the main release was the Australian Central Bank rate decision that shook the markets, well, especially the Aussie dollar. With the others significant German factory orders and the economic optimism from United States seen as a focus in the coming hours. From the technicals for today that we are going to take a look in a while, Euro remains pressured following yesterday's fall that reached levels well below 131.00. And we have some small technical problems. I do apologize for this delay. If you give me just a second, the charts are loading. Okay, now I think we have things ready here. Okay, starting with the single currency, hourly chart shows still a negative tone as the pair, the price descends of recent peak at 132.41 seen last Wednesday, with the low so far seen at 130.32. This is last Friday's, and yesterday's low was at 130.52. A sort of triangular consolidation with, of course, focus skewed towards the downside. As recovery of yesterday's low at 130.52 stayed short of 131 barrier, 130.93 seen so far, with the 55 days, hourly 55 days moving average so far capping the downside. Certain negative studies are on the hourly chart. Also, the 4-hour indicators are still in the negative territory, though the more positive thing is that the brief crack of the main bull trend line drawn off recent double bottom at 127.44 still did not produce sustained break lower. That means that the pair still has a sort of momentum that is better seen on the daily chart, and still keeping the upside more focused, though the price action is still entrenched within 129.50 and the 132.41 range, with the current price action seeing a more focus towards the lower boundaries of the recent range. Downside is also the downside support. The support is reinforced by 200 days moving average, offering a quite good support at 129.50-70 zone, and any break lower would more significantly weaken the structure and the risk double top formation that will be confirmed on a break below 129.50. Now back to the lower time frames. 4-hour structure is said the studies are still negative, and brief, as I said, crack of the trend line support is still not confirmed. We need to see the break above, break below 130.52, yesterday's low, and more significant 130.32, a low of last Friday, in order to confirm break. And then this is going to introduce psychological 130.00 support and the range floor at 129.53. This is the low of 24 of April 2013. From the other studies, Ichimoku showing a still neutral tone as the price is within the cloud of daily cloud, and hovering around the Tenkan Sen line that is currently at 131.14 above the Kijun Sen, but still no clear signal either up or down. Upside the barrier is close to the recent peak at 132.41. The cloud top is at 132.30, with the Kijun Sen line being at 129.93, just next to the psychological support, while the cloud base is around the 129.30, just below the recent range floor. No significant changes in the Ichimoku studies, at least on the daily one. Still showing a rather neutral mode at this point, as the major parameters, the major limits are still intact. From the other side, the British pound, after hitting fresh highs at 156.53, repeated attempts higher, failed, is currently in the corrective mode, easing down. So far reached on the overnight at this morning at 155.25 compared to yesterday's low at 155.19. As said, near-term tone is aligned towards the downside and sees more risk for a further corrective action following yesterday's unsuccessful attack at 156, 155.95, seen ahead of a quick pullback that reached 155.19 so far, and the overnight low at 155.25. Now on the 4-hour chart, indicator seems to be losing traction as all of them are heading south, and momentum is already in the negative territory. That sees increased risk of possible slide below initial support, that is 155 round figure psychological support, while more risk will be seen on a break below the recent range floor at 154.78. This is last Friday's low, and this is reinforced by ascending 55 days exponential moving average. Break below these levels would be a signal for some stronger corrective action, and then we have 154.47, 38.2% retracement ahead of the more significant 154 zone, where is the previous peak of 11th of April, as well as 50% retracement of the entire 151.95 to 156.03 rally. As said, near-term studies, the tone on the near-term studies is slightly negative. At the beginning of today's trading during the Asian session was the trading action was rather quiet, entrenched within the narrow range. Now the fresh weakness commences at the beginning of European session. We have to watch the recent lows at 155.25, 55.19, and 155, of course, break of which would be more bearish. Otherwise, further ranging with the upside being limited under 156 is seen as the likely near-term scenario. Daily structure is still positive and holds a positive tone, though the gains are limited by 50% retracement of larger 163.80 to 148.30 descent at 156.05, and the break here basically is required to resume this rally that is defined by the bull trend line drawn of 148.30. A break here is to open 157 psychological round figure resistance, and the 157.51 currently is the 200 days moving average. Conversely, break below 155, 154.80 is to introduce more bearish tone and allow for a stronger pullback that would be looking for test of strong support at 154.00, and then trendline support that currently stands at 153.15, ahead of strong support and base at 152.00. That is currently slightly out of reach. Dollar yen corrects its recent strong gains on the pullback seen during the late yesterday and during the overnight session, after gains reached levels at 99.44.43 yesterday. Now the corrective action dipped down to 98.81. It's significant that 99 support has been dented on yesterday's sharp fall, though the 55 days moving average on the hourly chart so far holds the downside, seeing again more potential in case the dips will be contained here, seeing more potential for fresh attack, for fresh attempt, higher and attack of yesterday's highs at 99.44 and eventual extension towards our recent peaks at 99.74, 99.87 and 99.93, and of course psychological 100 barrier that proved to be quite a strong resistance is expected to come in focus. For our structure shows a more constructive picture, as all the indicators are well positioned and they seeing a more bullish tone for a final attempt at recent range tops and the psychological barrier at 100 yen with the bullish crossover of 20-55 days moving averages at 96.20 now underpinning the action. Said immediate support is the current low that is at 99.80, just ahead of previous low at 98.50. This is the low of 23rd of April 2013. As said, more positive tone is still seen on the larger time frame, on the 4-hour time frame, and still keeps the upside more in focus with the recent strong base at 97.00. Offering good support and seeing the downside protected for now. As at 98.80 is the first support, then 98.50 is 38.2% retracement ahead of 98.20, 50% retracement. I would say break below 98.20, 98.00 would bring bears back in play, and signal another lower top currently at 99.44. From the larger picture, the daily structure of dollar yen shows a rather neutral tone at this point, though the indicators are well in the positive territory. More focus is still seen towards the downside, towards the upside, but range established at the beginning of April is still intact. The upside is limited at 99.90 approximately, and the downside at 96.70, and the price continues to move within this range. After a brief trip lower to 95.80 that was short-lived, still the price shows no direction at this point, and break of either side. At this point, more focus is still seen towards the upside. 99.90 and 100 is seen quite likely in the near term. Break here is required to give us the fresh direction. Basically, upside break will signal resumption of the larger uptrend of the dollar yen from levels around 77. The Aussie dollar was a top performer of the overnight session, as fresh weakness triggered by unexpected central bank's action broke below the recent range floor and the base at 102.20, and now we have the fresh extension lower that sees increased downside risk towards larger range floor at 101.14. Dips so far reached 101.77. This was the low after the release of the data, but the negative tone was increased basically on upside rejection last Friday at 103.21, and then subsequent fresh weakness through the triangle support at 102.60 confirmed the negative structure, though we expected some support to be offered at 102.20. That basically happened yesterday. Subsequent bounce higher to 102.53 was all seen from the recovery action ahead of overnight's fresh fall that now keeps more focus towards the downside. The upside resistances are at 102, 102.20, previous supports now acting as resistances, 102.53, and then we have the trend line resistance currently at 102.90, so close to 103 psychological barrier. Any break above these levels would require also break above 103.21 to avert immediate downside risk and the shift near-term focus towards the upside. Corrective bounce seen on the oversold hourly structure. It shows already on the RSI reversing higher. Should not have a stronger impact on the pair according to the current structure, as 4-hour indicators are also negative, and again see more room for a downside extension. On the daily chart, negative tone that persists sees risk further down, as we lost our initial support at 102 Fibonacci 50% expansion, and we're looking for a test of 101.56 that marks 61.8% Fibonacci expansion of the down leg from 103.83, and then our key support and the near-term target is at 101.14. This is the low of 4th of March, as well as larger multi-month range floor. That is seen as the near-term target. As said, only the gain of 103, 103, 21 would avert immediate downside risk and shift focus towards the upper targets. Though as long as we are holding below 103.83, 103.40, 104.00, pardon, where is 200 days moving average, the downside risk will remain in play. And from the commodities sell-off, basically the covering of recent longs produced the pullback of the crude oil's price from the recent peak at 97.11 seen yesterday morning, with dips lower seen yesterday down to 94.84, being contained by ascending 55 days moving average. Currently the price action is entrenched between 55 and 20 days moving average. The upper one is at 95.55. Now from fundamentals, some quite a negative tone is seen from fundamentals as China is showing as one of the second biggest oil consumers, showing a slowdown in the economy, and the US shows pardon, a reduced demand for the oil. That could be a negative factor for the oil price in the near term, though the technicals are still showing a positive tone, especially if you take a look at the larger time frames. Bulls keep the upside firmly in focus and remain in play after the price bounced from 85.90 low of 18th of April, and now it's approaching our next significant target at 97.68. This is the high of 1st of April. It's also important that a bear trend line of 100.72, high of 2012 in September. Crack of this resistance sees potential for a further stretch higher, though the gains above were short-lived. I would say this is now seen as a consolidation as long as we are holding above 94.66, previous high of 29th of April. More focus will be still seen towards the upside, despite again the negative fundamentals that are seen as a weakening point for the oil's price. From Ichimoku studies, firm bullish tone is seen on the daily. Ichimoku's keeping the upside in focus, though the Tenkan-sen line is still below the cloud, but well above the Kijun-sen, and the price action is above the tiny daily cloud top, which is approximately at 94.13. Overall, positive tone persists, with the pullbacks seen as corrective for now. And finally, gold that lost again traction on the overnight and morning trading, as the price dipped below 14.64, and they posted a fresh low at 14.57 this morning. And now the immediate focus is at 14.55. This is the low of last Friday, after a upside rejection seen at 14.87 on Friday, and steady descent since then keeps more focus towards the upside. Towards the downside, I do apologize. A larger picture is still showing a neutral tone. We still don't have direction, as the price action is entrenched between 14.40 and 14.87, with 61.8% retracement of the larger 15.90, 13.21 descent so far, limiting the upside, while the recent dip down to 14.40 1st of May low, and just ahead of previous high at 14.38 posted on 22nd of April, keep the downside protected. As said, the near-term tone is on the hourly chart is still again skewed towards the downside, as indicators slid in the negative territory. Confirmation, of course, is required on a break below 14.56 as initial support. That may open 14.48, the previous reversal low posted on 26th of April, and then our key support at 14.40 on the upside. 14.64 is seen as the next resistance. Then we have 14.70, while more significant barriers lie at 14.78.79 and 14.87, break of which is expected to introduce psychological 1500. Conversely, loss of 1455 and more significant 1440 set to signal the end of corrective action and bring the lower targets back in focus. Reminder that daily structure is still negative. Indicators are pointing higher, but still well in the negative territory. That seems to be quite a negative factor and the limiting factor for the current recovery of 1321 low of 16th of April. Break above 1487 and regain of 1500 is required to improve the tone and basically the introduce our next significant target. Previous critical support now acting as a strong resistance, multi-year range floor that stands at around 1520 zone. And this is all from me for today. Your time for questions and answers. If there is anything, please you can send it now. Okay, we have a silver. And just switch the screen. Similar to gold, the negative tone persists on the silver following last. You still don't see the chart. Okay, no, it should be okay. Following yesterday's spicy, upside rejection at 24.43. Yes, a fresh slide lower dipped below psychological 24 level and reached 23.55 so far, retracing nearly 76.4% of the recovery rallies from last Wednesday's low at 23.24 to 24.43 yesterday's peak. Negative tone as set dominates on the 1 hour chart with the 4 hour indicators being rather neutral at this point, as the price is still entrenched within 23.24 on the downside and the 24.50-60 on the upside. The range current action seen this morning turned the focus towards the downside as the price dipped below both 20 and 55 days moving averages. Still break below 23.44 and 23.24 is required to confirm negative tone and confirm the top at 24.83 for a possible extension down towards the next set of supports, 23.00, 22.60 and 22.45 recent lows ahead of our key support at 22.00. As we can see, the corrective rally of 22 was limited under important 25 level, psychological level, and 50% retracement of the entire down leg from 28.07 to 22.00. Still, this could be seen as consolidation as long as we are holding above 23.24, 23.00. Otherwise, the focus will be shifted firmly towards the downside and will keep the price action under the pressure. From the daily chart, negative tone still persists, though some bullish momentum has been built on a bounce from 22.00, but still lacking strength for a more significant action that requires break above 24.83 recent high and 25.00 is 50% retracement in order to confirm a recovery. So far, where the price is entrenched within the range and sees not much potential towards the upside. Any further question, please? Okay, if not, then we'll conclude today's session. I would like to thank you all for being with us. I expect to see you again tomorrow morning. We are back at the regular time at 7:00 GMT, 10 o'clock local Cyprus time. Until tomorrow, I wish you a nice Tuesday and, of course, a lot of profits in your trading. Good luck.